Hello friends, in today's video we will talk about the multi-bagger stock of 2022 which is falling in 2023 and the stock is Adani Wilmar. Shares of Adani Wilmar, the star performer of 2022, have turned weak this year. The stock, which closed at 617.6 on December 30, 2022, fell to 546 on January 23, 2023, losing 11.56% during this period. However, Adani Wilmar stock became a multi-bagger last year after a muted market debut. The Adani Group stock made its market debut on February 8, 2022 at Rs 221 on BSE. By the end of the year, the stock has delivered 179.40% returns to investors. Meanwhile, the stock is also trading 38% lower to its record high of 878.35 on April 28, 2022 on BSE. In the current trading session, Adani Wilmar stock rose 2.53% to 560 rupees on BSE. Total 1.76 lakh shares of the firm changed hands, amounting to a turnover of 9.88 crore on BSE. Market cap of firm rose to 72,788 crore rupees. In the previous session, Adani Wilmar stock ended 1.51% lower at rupees 546.20 on BSE. Total 1.29 lakh shares changed hands, amounting to a turnover of 7.13 crore rupees on BSE. Market cap of the firm fell to 70,998 crore rupees. In terms of technicals, the relative strength index of Adani Wilmar stock stands at 36.8, signaling neither the stock is overbought nor oversold. The PE ratio of Adani Wilmar stands at 87.86, signaling the stock is overvalued compared to the industry. The PE of industry stands at 66.65. Adani Wilmar shares are trading lower than 5-day, 20-day, 50-day, 100-day and 200-day moving averages. The Adani firm reported a 73% fall in the net profit for the quarter ended September 2022. Net profit slipped to 49 crore rupees against 182 crore profit in the second quarter of the previous fiscal. However, the revenue rose 5% to 14,209 crore rupees in quarter 2 against 13,584 crore rupees in the September quarter of the previous fiscal. Here is a look at what analysts and brokerages said on the prospect of the Adani and the ongoing correction and post-December quarter earnings. Vishali Parekh, Vice President Technical Research, Prabhudas Liladhar said, recently the stock has slipped below the crucial support zone of 560 rupees levels, weakening the bias and is anticipated to witness some more slide with next major support near 490 rupees to 495 zone. For the bias to improve from current levels, it has to move past 590 to 595 rupees zone decisively to establish some conviction for the further continuation of the uptrend. Currently, the overall bias is weak with further slide expected and next major support zone near 490 to 495 levels. Of late, the stock has witnessed diminished volume participation with gradual slide happening, and for the bias to improve, one should wait for some positive movement with decent volume participation to be witnessed where one can establish some view to buy the stock. The stock has slipped heavily and moved past below the significant 200 DMA level of 635 rupees last month, weakening the bias and trend. As per the daily chart, further slide is anticipated, keeping the previous low of rupees 495 zone as the major support zone. Ganesh Dongre, Senior Manager, Technical Research Analyst, Anand Rathi Shares and Stock Brokerages said, on the daily chart, the stock is still under selling pressure. On the indicator front, the stock is also trading below 200 DMA, which is a sign of weakness. So, until we don't cross 200 DMA, which stands at Rs 640, we will avoid the stock as a fresh buy. Also, on the weekly chart, the stock is still making lower highs and lower low formation indication nervousness among the participants. So, we will avoid buying this stock at the current level. Now, Rajesh Palvia, Vice President Technical and Derivative Research, Axis Securities said, the stock has been consolidating on a monthly chart in the range of 850 to 860 rupees on the upside and 530 to 550 rupees on the downside. Any sustained move below the 530 rupees level will lead to a decisive fall. which, while on the other side, it needs to cross 650 to 670 levels for a significant upward move. Currently, the stock is trading well below its 550, 100, 200 moving averages, indicating overall limited upside. However, sustained move below the 530 to 524 mark on a closing basis will turn out to be daunting, testing levels. On the daily chart, we noticed Adani-Wilmar had formed a bearish engulfing pattern indicating a downtrend for a short to immediate term. However, the impact of the same is more significant if it occurs after a significant up move in price accompanied by large candles which are not 100% accurate in the current case. So to make an inference from the pattern, we can say that a yes bearish pattern has formed but of a lesser magnitude. It will ultimately be the price action that is likely to dominate the trend. Thanks for watching this video. Stay tuned with Financial Pulse for business and financial market updates.